Paid program. The views and opinions expressed are those of the sponsor and do not necessarily reflect the views of Radio 1, WTLC AM 1310 The Light, and its management.
Welcome to the Home and Finance Show on AM 1310 The Light. Now it's time to get straight talk about financing a home and insider information about buying a home from the experts. And here they are, your hosts, Janis Bradley and Diana Rice-Wilkerson.
Good afternoon and welcome to the Home and Finance Show. Excuse us, Diana and I were talking, forgetting that we were on the air, but we're just human. Welcome to the Home and Finance Show. We are your host. I'm Janis Bradley, owner-broker of JB Real Estate Consultants, and my co-host.
I'm Diana Rice-Wilkerson, loan originator.
Well, it's a rainy day, but it is good. It is all good. And I know everybody's kind of staying in so they can just get a lot of different things done, right?
Right.
We hope so. We really hope so. But let's just talk a little bit about home and finance. You know, given that the home ownership is the cornerstone to America's promise, we do believe that everyone who desires to own a home deserves the access to the best price, highest quality products in the marketplace which they can afford. It is our mission to provide as much as possible, give you accurate, up-to-date, honest information concerning the home and finance markets to our listeners. We are committed to providing individualized, state-of-the-art professional services to our customers who are in the market to buy or sell a home. Finally, we are dedicated to ensuring that those we serve can enjoy and prosper from owning their home long after they have secured the American dream. So this is what we're all about. That said, if you are in the market to refinance, build, or sell a home, you've not yet chosen a realtor or lender to represent you, Diana and I certainly would ask you to consider us. You may reach Diana at, Diana, your number?
My number is 317-402-5555.
And you can call me, Janis Bradley, at 317-590-7348 for any of your real estate needs. Again, today we're going to be discussing most current information we can about home buying, refinancing, lender considerations, just all kind of, every week it's always going to be something different. Probably also some things that we also just want to make sure that we discuss again, just simply so that we're making sure that everybody's getting it and everybody's on the same page. We welcome any questions or concerns that you may have on any subject. Please give us a call at 239-1310, 239-1310. Last week, we had a lot of different calls, which we really appreciated. Any information that you have a question about or you want to share always helps others. Believe me, we're all in the same boat. You know, we want to learn more. Like Diana always says, you know, we what do you say? What's that saying? Okay.
What is that saying?
The saying is that if we know better, we do better.
Yes.
And see, I have never been one to give any kind of example for whatever you call it, something that rhymes or anything like that. So anyway, I'll just write that down for you. But you know, we're here to have a lot of fun and to give you as much up-to-date information as possible. So what's going on with you, Diana?
Hey, I'm just glad to be in the studio today. It is always exciting to be here live and have our guest with us or our listeners with us. So as Janis said, please call in with any of your questions because your question, I promise you, others have the same question. There is no dumb question. Well, in the world of finance, there's just a lot going on, guys. Amazing, amazing, amazing. We know and we understand that today rent is outrageous. And if your rent is not outrageous, just keep sticking around wherever you live. And soon you will be notified that there's going to be an increase. So what we are advocating is for folks who are interested in becoming homeowners, because not everyone is, and that is totally understandable. But for those of you who have that as a dream, we are saying get started now. Even if you don't plan to buy until a year from now, 2 years from now, 3 years from now, 5 years from now, it really doesn't matter. This is a good time to at least have a checkup, a financial checkup to determine exactly what you qualify for, and maybe what you need to do to tighten up your situation so that when you do decide to move forward, you're ready. One of the things that does stress me out, because I'm in, like Janis says, we're all in this together, you guys, and one of the things that I love about Janis and myself, it's a good thing and a bad thing. We feel you. Believe it or not, you may not think we feel you, but as soon as you go into this process, and certainly once you sign that contract, we are there with you emotionally. So we like to see that deal come to a close and, avoid challenges and all of that good stuff, just like you do. We're not sitting back just kind of waiting for things to fall together. I'm saying that to also say that the folks who have leases expiring, who decide, and I don't know how you come to this decision. Now, we're going to have some fun, but we also have straight talk and inside information. So straight talk, how do you decide maybe 3 months before your lease expires that this is the time now for you to start trying to get ready to buy a house? That is not a good time frame. We advocate at least a year or two out, because it may take, when you apply, for example, with me, when you apply, one of the things I'm trying to do is give you your loan options. And we're both always trying to make sure, if you're a first-time home buyer, which is defined as, I'm not going to give the answer. We'll see who calls in with the answer to that, 239-1310. If you are a first-time home buyer, there are a lot of options out there for you. There are a lot of perks and there are a lot of benefits. Well, if you wait too late to start the process and you have a deadline when you have to be out of your home or out of your apartment, you may not have time to get things together so that you can take advantage of the great benefits. So, and maybe it's a credit score thing, or maybe it's a debt ratio thing, or maybe it's a combination, or maybe it's the fact that, you've got temporary employment where you're going to become permanent, in 6 months, and you need to close in 3 months. I mean, whatever it is, we want the ability to talk to you beforehand and get you prepared and give you enough time to actually make that purchase as smooth as possible. So 12 months out, 24 months out, 36 months out, it does not matter. If you are thinking about buying a home, I would say definitely give me a call. I am your first step. That is for your pre-qualification or pre-approval. My number is 317-402-5555. Thank you.
Great information. Interesting enough, I decided to do some statistics today, and one of the things that came up, and I'm just going to piggyback on what you said about rent, and there was a graph, and it actually shows that as of August 2016, the average rent per month is $1,000.
Yeah.
Yeah. So,
that's a $150,000 house in most cases, and it could be even more depending.
And interesting that you said that too, because in Indianapolis, which I think is going to basically be dealing with Marion County, the average listing price is $152,000. So go figure.
Yeah.
So you're saying $1,000 a month, what you're paying for rent, can actually be a $150,000 house. And to this day, when you even stop and think about $150,000 house, that's nothing to, hey, that's a good thing.
Yeah.
You can get a lot for your money for a $150,000 house.
That is true. And yet, that is true. And yet, there are a lot of homes priced a lot less that are also very, very nice. Because you know what? The typical answer when I ask the question, what is the most you want to pay for a mortgage payment, including taxes, insurance, everything rolled in, it's generally going to be somewhere between $750 and $850. And so $750 to $850 has you somewhere around $100, maybe to $130. So again, if you're paying that $1,000 a month, and some of you are and don't want to, I hear that an awful lot. It's like, Diana, my rent's $1,000, but I'm not trying to pay that. That's fine too, because there's a wonderful, there's a lot of homes, I should say, that are in that price range that are also on the market today. Now, on the other hand, that said, you can't mess around. Janice will talk to you about that. If you do happen to find a home, regardless of the price, I mean, it could be $400,000. This is a hot market. So if you do find one of those homes, you do need to be prepared to negotiate and get some signatures on the line really pretty quickly. And,
again, one of the reasons that we can share with you the price range of the house versus the monthly payment is because of this dynamic interest rate. And the Board of Realtors have given us a mortgage update that is 3.57. 3.57.
Yeah.
I can remember when I first got into real estate and people were talking about interest rates being some time ago 6% and all of that. And I just ignored it. And I just said, who could ever do something like that? Of course, we've gone through a cycle of doing every single thing possible.
Yes, we have.
But the board also has a little housing snapshot. And basically, it's just sharing with us that Now, this again is the Board of Realtors, so that's going to involve all the townships. The average sales of the houses are around 203,000, and then they're saying that the average days on the market is 64. But see, that's going to depend on where you are, okay, and what areas that you're on. And Diana also was sharing with you again what you could kind of get for your money because of the interest rate and because of your monthly payment. I just kind of want to share a couple of things with you from January 16 till today, basically. This is really what's kind of the real estate trend that's been going on. So, again, let's say from 100 to 119,000, there have been 680 three bedrooms that have been sold. And then there's been 108 4 bedrooms that are sold. Just trying to give you an idea of what you're getting for your money. Mm-hmm. Let's just kind of jump up a little bit to 160 through 179.9. 3 bedrooms, there's been around 334, and then 4 bedrooms, 253.
Is that in Marion?
This is actually Marion.
Marion.
This is Marion County, and thank you for helping me share that with the listening audience. So again, just understanding that, when somebody tells you, okay, I want a 4-bedroom, such and such, sometimes they'll say with a basement or whatever, you kind of have to look at really where you are and who. My whole point in this is that there are a lot of people in these particular price ranges. Right. And that's why when you're going in these particular price ranges, why these houses are going so quickly. Right. Okay? Yes. Because again, if we're 150, 571 3 bedrooms were sold. 245 for 4 bedrooms. So you get the idea? Yeah. Mm-hmm. Of really what's out there. And I think it's a very good idea for people, especially since everybody's on the internet and you know how to Google and all of that. You kind of need to really see what's out there for your money when you're saying, okay, I know that a lot of times people just say, I'm looking probably at a $120,000 house. Right. But I don't think they have any idea what the monthly payment might be or really what they can get for $120, wherever they might be looking, because location is always everything. But just kind of want to get you in the loop and just kind of see what's going on. Again, it's just so interesting what the real estate trend is. And let's just kind of talk about some things that I felt like were really something I kind of wanted to share with you. And Diana, I think what I'd like you to do is just kind of jump in.
Okay. With both feet?
With both feet. And I'm just talking about the market today and helping you buy, what you need, what you're looking for in a timely manner. So these are just some of the mistakes that sometimes we make when we're buying. And number one, of course, is not getting pre-approved. Now, I want you to jump in, listening audience, 239-1310, and just kind of share with us while we're having this conversation, what do you think are some of the mistakes buyers make, or maybe you made when you bought a home? 239-1310. We need to share this information just simply so we can just help each other out. Can we get an amen on that?
Amen.
Again, not getting pre-approved. Often, I'll get a phone call. Other realtors, I'm sure, get a phone call about this house they want to see at ABC Street. And the first question we'll ask them, okay, I'll ask them if they've called. Are you working with a realtor? No. Have you been pre-approved? No. Okay, do you know where you're trying to keep your monthly payment? I'm just trying to keep it light and what have you, but they want to know when they can see it, okay? And they just want, and then they'll say, well, I just want to see it. I just want to see it, and then if I like it, then I'll go, talk to the lender. And again, all I want you to do, listening audience, is just put your hat on, put 2 hats on, put the buyer's hat on, put your seller's hat on. Okay, so we as realtors are professionals, and we're obligated by code of ethics to bring approved buyers through the houses for the sellers. We want to make, we've got to do that just to make sure that we're just not having people come through their house. They may not even be your intention of just really thinking that, oh, I'm not going to take anything or anything. That's not even where we're coming from. But we want to make sure that we're in a position to bring qualified buyers through the house. That's just what we do.
And I always tell Janis, otherwise, it's a home tour, and they're not setting up private appointments for home tours. Now, on the other hand, the open houses, many times on Sunday, that's what they're for. Anybody can come. I think they actually want neighbors and anybody else to come in and see this house, and that way you can tell friends or family or whatever. But that's where anybody can go in. But again, those private showings, so to speak.
Right, that's what they are.
They're private showings. You do need to be qualified up front, have a pre-approval letter, pre-qualification letter to go see it.
Yeah, and my 2 cents, and we'll get to Mark in just a minute.
Okay.
Even on open houses, I share with my sellers, you still not necessarily bringing qualified people through.
That's right.
And why have you? And I'm not saying it's not a good thing. I've sold houses through open houses.
Right.
Only on one hand, though. But
right.
Again, hey, we've got Mark on the line. Hi, Mark. How are you this afternoon?
Hey, how's it going?
We're doing great. Thanks for calling in.
Yeah, I was sitting at my desk and I wanted to call and commend all the information that you're saying. If I can say one show that's 100% fact check and everything is coming true, I can say it's your show. I just want to tell you, Indiana is hot real estate. I don't care what perception of people are saying about Indiana. These houses are selling like hotcakes. It's almost like they're giving them away. People coming from out of town buying these houses up.
True.
Like you said, Marion County, guys everywhere. I want to ask you a question. How long do you think the interest rate is going to stay low? And if it does go up maybe 2 or 3%, do you still think that the real estate will still be hot? And once again, I'm going to take it off the air. I don't care what the other people say about crime, this and that. It's not stopping nobody from coming to Indiana buying houses. Thank you.
Thank you, Mark.
so much. We do
Mark
appreciate
say
it.
a whole lot in that.
And
thank you, Mark.
And before we get to you for the interest rate, Diana, again, when I was going through the statistics, and I forgot to really pull this one, but we are still the hottest market. We still are the more affordable here in the Midwest and with Indiana. And there's no doubt about it. When you have people relocating from the East Coast and the West Coast, they think they have died and gone to heaven, because they actually have, because of the buying power. So again, you're right. The houses are going like hotcakes. Although I have to say it is countrywide. I was just sharing with Diana, a niece of mine over in Pennsylvania is buying a house, and I made sure that she had all the proper channels to go through, so that she's going to have a less, since I wasn't holding her hand there, have a good experience buying. And she said the same thing. She said, well, Aunt Janice, she said, every house I went into, it was sold by the time I went. I said, honey, this is the way it is around the country. But here, in certain locations, we're doing hot. Let's talk about that interest rate. What you think?
Well, number one, I think the rates are going to stay low. I do think they're going to stay low, certainly through the election and probably on into next spring. That's just a personal opinion. Now, what is low? Right now, we are in the 3s, in the 4s in certain cases. You guys, again, that is unbelievable. Those rates are unbelievable. Even 5 is awesome when you look at the history of interest rates, which is what you got to have. What is it Janice says? You got to know where you're coming from. Yeah, to know where you're going. So in order to keep everything in perspective, I do believe interest rates will remain low. Now, today's interest rate, and Mark said it's almost like they're giving houses away and the houses are selling like hotcakes. For me, the reason why I relate to that is because when you tie all of these things together, this rent that is $1,000 a month, $800 or $900 or whatever it is, and you actually move out of renting and go into home ownership, and you have quality housing stock that is affordable, not only with a low interest rate, but layer that with down payment assistance for non-first-time and first-time home buyers. The vast majority of it gets no better. The vast majority of my loans that I close, the buyer is using down payment assistance. This is whether they have the money or not. And the reason why is because the market rate with their own money down is, let's say that's 3.6. Then the down payment assistance rate is 3.8. You're talking about a difference maybe less than $20 a month on the monthly payment. For most of us, we would say, hey, I'd rather keep my money in the bank than to spend it in down payment for just this difference. So in a lot of ways, if you can buy a house and ultimately it costs you, in many cases, less than $500 out of your pocket. Now, I'm not saying that's going to be your situation if you decide you want to buy. But in the vast majority of cases, that's what it's costing you by the time you get it all said, dead, and done. It is like giving homes away. It's just a choice. You have to decide that this is what I want to become, a homeowner. So whether or not you filed bankruptcy yesterday, or you're looking at filing bankruptcy, or maybe you never have, but you never really thought about this homeownership thing. You know, the thing about it is you can get in position to buy a house, and that can happen pretty quickly for you. And since I did mention bankruptcy, Janice just reminded me to kind of go through some things just so people do know, because we do realize that ideally, you know, we're looking, as a lender, we're really looking for that buyer who's pretty strong, great credit, low debt ratios, you know, money in the bank. Who doesn't want that client? But for many of us, we've experienced life, and we may have went through some things. So there's life again after bankruptcy when it comes to buying a house. And just so you know, if you filed a Chapter 7 bankruptcy, that's the bankruptcy where your debts were discharged and you didn't have to pay anyone back, and there was no real estate involved, then you're eligible for mortgage financing 2 years after the discharge date. The key thing that you want to do in that 2-year time frame is rebuild credit. You don't have to have a lot of credit. I would advise you to call me for just coaching on what you really want to do to rebuild that credit. So in 24 short months,
24
short, you're able to move forward with purchasing. Same thing with a foreclosure. If you've had a foreclosure on a property, typically we're looking at 3 years from the sale date. And so what we're looking for is the deed that took your name off title and put, whether it's the bank that bought it back or anyone else that bought it back, it's just the deed that transferred your name out of title. That needs to happen. That needs to have been the case for at least 3 years. We call that seasoning. And then in that case, you're able to move forward as a first-time home buyer because no one called in. If you've not owned a home as your primary residence in the past 3 years, you are considered a first-time home buyer and therefore eligible for first-time home buyer benefits also. Same with a short sale. If you've had a short sale, and a short sale, not a quick sale, short sale is a situation where the bank has actually allowed you to give them, for a payoff, less money than what it actually took to pay your loan in full. So let's say you needed $100,000 to pay your loan off in full, and let's say the bank accepted $95,000 or $90,000, and that's a short sale. So you're short of what you needed to really pay it off, but they accepted that, and they said, hey, you're paid in full. Well, in that situation, you normally have to wait at least 3 years from the date of the short sale in order to buy a home again.
The one thing you have to remember, these are hardship situations.
Yeah, these are hardship situations. Now, there are exceptions to some of these in terms of the 3-year time frame. Veterans especially possibly can do it a little shorter in 2 years. But the main point is when I got into the business, if you had a bankruptcy or any of this, you were done. It was over, guys. You couldn't do anything, period.
Just pull the covers over your face.
Get ready to rip. So what's beautiful is now that no longer exists. And back when I got into the business, a lot of people had to buy on contract or they had to use alternative methods because credit was very difficult to get. That is not the case right now today. Now, that said, rules change seems like every minute. Last year, it was a lot easier to get financing last year than it is this year, simply because, one of our most favorite products is the FHA product, and the change that still has my head a little tight is the change with student loans. So effective last September, so regardless of the status of your student loan debt, regardless, you could be in deferment, you could be in repayment, you could be whatever. Regardless of the status of your student loan debt, in most cases, we have to use 1% of the balance owed in student loans in factoring or determining your debt ratio. So if you owe $50,000 in student loan debt, and maybe that's deferred. Possibly you're still in school, getting a master's, doctorate, whatever. We still have to use $500 in calculating your debt ratio. For a lot of people, unless they really have no other debt, that is a deal killer. And it's a fake-o payment. It's not even real. So I don't want to get on my soapbox about it. But I'm saying that to say people who put off buying a home until this year, maybe they could have bought last year, but they put off buying until this year. In some cases, they also no longer qualify, period. And that is why it's important. It is a big deal. It is an important, it's a great wealth building tool for most people. That is the single most common way people do build wealth. So again, especially if you have limited resources. Now, if you have plenty of money and great credit, you can do it whenever you want to. But if you have limited resources, if you're your typical, working person, I would say if homeownership is something you really want to consider, then now is the time to at least consider it.
Okay. Very good. And we do appreciate Mark. We need to send him a gift. Yeah, call in, Mark, and talk to the technician. We can send you at least a gas card or
yes,
car
that was
wash.
an awfully nice
That's for
comment.
sure. We do really appreciate that. Okay. I kind of lost where we were, so let me just kind of go on. Again, I want to talk about, listening audience, mistakes that we make when we're trying to buy a home. So, again, if you've had any kind of information you want to share or experiences, 239-1310. We had talked about getting approved. That's what being pre-approved. That's what we were talking about.
And
Go
Janis,
yes.
While you're talking about that, I just want to throw something out to the listening audience for the benefit of the complete listening audience. Because we are talking about that rent payment versus home ownership.
Okay.
And you had mentioned the $125,000 purchase price. We already talked about $150,000 purchase price. But what I'd like to do is just say to the listening audience, two questions I have. If you're purchasing a home for $125,000, okay, what do you think your down payment would be? How much money down? You can give me an approximate amount. That'll be fine. And then how much do you think your monthly payment would be? And anytime we're talking monthly payment, anytime Janis and I are talking monthly payment, we're talking total monthly payment. So we're talking payment that would include your taxes and insurance. These two questions are really intended to give the listening audience a perspective.
Good idea.
A perspective.
Okay.
Because we hear numbers and we really don't know what that translates into. So I'm interested in what is the down payment on 125 and what is the total payment on 125, and this payment would include your taxes and insurance. Call us at 239-1310, 239-1310.
Something else that Mark mentioned that we didn't address, and I think that was also asking about the market still being hot, or do we think it was going to continue? But one of the things that I think we're going to see is still homes on the market because of the baby boomers. Baby boomers are doing all kind of things. Some of them are downsizing, let's say most of them, but also looking at things a little differently as far as maybe a home that's going to accommodate, a aging parent,
yes.
Things of this nature. So, we're just dealing with all kind of situations that are not going to stop, are just not going to stop, baby boomers, which I don't know why they call them baby boomers. I'm part of that, and I'm certainly not a baby or a boomy. But anyway, so just look at the big picture of how things just really happen, and how I say the world turns as it rotates. And regardless of the fact, people always are going to need a place to live.
They are, and that's another reason why you want to invest in yourself instead of somebody else, because otherwise that somebody else can call the shots and keep raising your rent. Janis, I have a question for you. Just based on what you just described, the family configuration is sort of changing. Back to what you said, that aging parent. There's a home that we refer to as a home with a mother-in-law's quarter. Are those mostly custom? Do builders build those in the track build situations, or what if a person truly would like something like that built or would like that kind of home? It doesn't even have to be brand new. How do they go about finding that?
It is a little difficult.
Okay.
It's a way that we have to search, to be perfectly honest with you. What I have seen in a lot of in-law quarters has been probably a little pricier, more custom, things of this nature. However, you might be able to find a house that maybe an addition was added on, okay? Something of that nature, or a finished basement. And the finished basement may have a finished bedroom area, and even bath areas. So it's the way you really search.
Okay.
What I find that the buyer is looking for sometimes with that in mind of a aging parent might be not necessarily a ranch. I mean, obviously that would be great, but maybe a bedroom on the main floor. Okay, so, again, it's maybe an active family, but again, if they're thinking about bringing someone in, they do need that bedroom, have a bedroom, and it doesn't necessarily even have to be a master, but at least have a bath area or a bedroom on the main floor.
Okay, makes sense.
Yeah, so it just depends on how you're searching. I would probably say that if you're thinking of that, you might really want to see exactly like you say, give yourself a head start, see where you might be price range wise in case you do have to build, or maybe even add on, see if it's worth it for you to go ahead and do some remodeling. If you plan,
I love that idea.
Yeah, if you plan I know where I live. I certainly have enough land for it, to do something like that if I just wanted to. So that's still a thought. And if you're not going anywhere, and you don't care, and you just add on, just go ahead and add on.
Yeah, you like your neighborhood. It all works for you.
And it works for you,
Yes.
because even if it doesn't necessarily bring you a lot more value, which you don't know today, but it could, you got to do what you got to do, and then we're going to have some experts on talking about remodeling and doing some construction to help, update your house and things of this nature.
Perfect. Along those lines, there is a program, my favorite for remodeling and room additions and updates and that sort of thing is called the FHA 203K. We do offer that at Fairway where I work. It's a wonderful program, you guys, but it's one where you can, if you own the property or if you're buying, it doesn't matter. Either way, you may decide that you do want to upgrade your property. And especially sometimes I think if you're getting ready to sell it within the next 3 to 5 years, it might be worth it upgrading it just so that you can maybe get a higher dollar amount, or if you just want to upgrade it for your own purposes. Sometimes that's a better way to do those upgrades, refinancing and using a 203K product versus a second mortgage. It's just one of those things where, a lot of people are staying put. They do like their community. They do like their neighborhood, but they may need upgrades or they might need a little bit more space. We can do that for you with the 203K product.
And back to you on that, Diana, updates are very, very important. Updates are very important. I don't care what area, location that you are in. Yes, because I've seen some of the nicest houses, that are very, very nice. Brick, ranch, solid, good bones all the way through.
Right.
But the bones inside, maybe need a little help,
dated.
Dated. So, and that's very important. Like you said, even if you're not thinking about moving right away, if you're going to want top dollar, because people, when they go in the house, 9 times out of 10, they don't want to do anything.
Doesn't that make a lot of sense?
Well, and it does. And people, sometimes it's just paint, but all of a sudden that paint has turned into, like a whole remodeling project.
Yeah, because some people
paint,
can't get, they just can't get it.
All over paint. There was something I was going to say to that when we were just talking about, but I've lost it. Okay, so mistakes. Again, I haven't heard from you guys. 239-1310. Mistakes that buyers make when buying. One of the things number one, we talked about not being pre-approved. Number two, just want to talk a little bit about having an experienced real estate consultant. So let's talk about what your agent, really should have knowledge. And Diana, again, you can definitely jump in on this. So does your agent have knowledge about foreclosed homes? Is the agent HUD approved for the HUD repossessed homes? Because again, there's something that goes into that, and I think that's what it was that I was just thinking about when we were talking about the 203K loan on the HUD properties. Because again, some of they're doing things a little different like with these repossessed homes with HUD. I'm noticing priced really very, very well. They're not doing appraisals on them anymore like they used to.
Right.
However, in my opinion, the way that they're indicating the condition or what have you, to me, is a little off, and that's just me, because, for instance, they have just different coding. So the IN means that this is why your agent needs to know what all this means before they even write an offer, or else you'll be in real trouble. So the IN means, insurable. They're saying, okay, we've insured it before, and we'll take it back with FHA. So supposedly they've looked all through the house for anything major or anything they feel like, should be FHA requirements done. But I've walked into a home that's been IN, and who could live with this carpet? You can't. Or maybe the appliances are gone. Things of this nature, or maybe somebody got mad and they threw whatever on the walls. But again, it's not the necessarily condition. It is the cosmetic and cosmetics. And again, just don't let that throw you off. If you can qualify for the 203K loan, you can actually maybe only spend $10,000 more. That's going to affect your payment. What? $60 bucks. Okay. $10 more to get brand new appliances.
$10,000 more.
What did I say?
$10 more.
I like the $10 more.
We got problems, you guys.
Okay. And again, you've got stainless steel appliances, new countertops, so on and so forth.
And it's all rolled into that monthly payment.
So we just kind of want to help you to think a little bit different.
I got a question for you. On the HUD REOs, if the buyer is going to go 203K and you put your offer in for 203K, does HUD allow you a little bit more time to close on those? Or not?
That's a good question. I think they do.
Okay.
I think they do. And especially if you know that you're not going to meet that time frame when they send you back the contract that says the date that you need to close. You're closed by. But I think there might be a consideration in that. Certainly, I do know that if not, then you can ask for an extension. And when it's 203K, I've never known of them not giving you an extension.
Right.
Without having to pay for it.
Right.
So, there's just ways to do this. And that's, again, why we are talking about making sure you have an experienced agent, in certain categories when you're trying to buy. And probably all of them. I mean, just simply because, you just never know what's out there and what's going to work best for your client.
I just want to say, too, on the HUD REOs, I think even on short sales, and there's a variety of homes today out on the market being sold by different entities. Red flag to me, this is just to me, but if your agent steers you away from a certain type of house without, and steer is the word I really want to use. Coaching and counseling is one thing. So if you think you want a short sale property for your agent to share with you, hey, this is going to be one of those situations where you cannot be in a hurry. Right. It may take a while. Right. That's not steering you. That's educating you. There's a big difference. So, but if your agent is steering you away from a HUD, steering you away from a short sale, steering you away from a bank owned, steering you away from a foreclosure, in my opinion, that's a red flag. It may be that they're not comfortable really selling this type of or representing you on this type of transaction because they don't have the experience. And so I'm just saying that because I have had agents just saying because I've had agents write contracts. Okay, I've pre-approved this buyer. I've given them the letter. The next contract I get is it is a short sale with a crazy closing date, or it is a HUD REO, and the offer doesn't take into consideration certain other things that it needs to take into consideration. And then when it puts me in a bad situation, it puts us all in a bad situation with the buyer because now we can't really do what the buyer's expecting. That is generally because the agent didn't know. So once again, if you're talking to an agent or you're shopping for an agent and they start steering you away, then I think that's a red flag. Educating you is a different thing and a different conversation.
Hi, Chris. How are you this afternoon? Thanks for calling in.
Hi, how are you?
We're great. Thank you.
The question you had asked about 125, a house costing $125,000, and how much was the down payment and how much was your monthly? I was thinking $12,500 down.
Okay.
And about $700 and probably about $730, $740 around there as your monthly payment.
Okay.
Including taxes and insurance.
Okay. Well, let's talk about that. Actually, and thank you so much, number one, for calling in. I really am happy that you did. Okay, so we're talking a down payment of 3.5%. So we are talking $4,300, 3.5. But this is the reason why I put the question out there, just so everybody can have an idea. Down payment is 3.5%, which is $4,375. It could be now. That's FHA.
I was calculating at 10% down.
You were calculating 10% down.
125.
Love it.
Absolutely. And so we do love it. So again, thank you. But the down payment's going to be $4,375. This is FHA, and it's still going to be in that ballpark, even if we were doing conventional. And the reason I'm just making that point is so people will know that it is more of an affordable amount, and you can possibly get down payment assistance for it. So you don't necessarily have to pay for it out of your pocket. Now let's talk about the monthly payment. I'm going to say your monthly payment is right on if the down payment was 10%. Okay. So if the down payment was 10%, your monthly payment's right on target. With the down payment being 3.5, then the payment's going to be around $824.
Mm-hmm.
$824.
Yeah. So who wants to put 10% down?
Chris, you're awesome. Will you please stay on the line and give Brandon your information?
Yes.
We do want to give you a gift card.
We sure do.
Thank you.
Okay.
All right.
All righty.
And the reason her answer was so fantastic is because this is what is advertised on TV and just all over, where you're only hearing
reality shows.
The reality shows. Oh, we won't even go there.
Janice's favorite.
But this is it's the same thing with my niece when she called me. Aunt Janice, I think I'll have at least 20% saved, or by January is what she said to me. And again, by the time we got all those things that she needed to understand and what have you, I get a Facebook. I bought a house now, and she got down payment assistance.
Yes. She
got down payment assistance and went on a conventional loan. She got $6,000 down.
Yeah.
This is in Pennsylvania. Her house is it's almost $200,000.
Yeah. 3%.
Okay.
Absolutely.
Love it. So this is what we're sharing with you is that again, and I'm going to bring this up too, and some of the mistakes that are made when buying. You got to have some agents also that know what they're doing.
Amen.
In case and the programs are out, in case they come to you first before you give them to
the lender.
The lender. Because this is real, guys. I mean, this. Versus, she thought $12,000,
right.
And it ends up being $4,000.
Yes.
Basically, we're talking about for down payment.
Right.
How much better can it get?
Absolutely.
And you know what, guys? You have to understand something. This is who we are. This is what we know. It's all about us.
Yeah, I don't know much about anything else, but I do know about lending.
I don't know anybody has any money. All of us.
No, stop.
Okay.
The other day, I had. My closer sent me the final closing disclosure for my client, and it had her bringing like $3,500 back, $3,500 to closing. And I emailed her really quickly, and I said, "Hey, I don't think the seller concessions are added." And so then all of a sudden, I said, "Let me check." So I went back to the application, and she was supposed to be bringing $3,500, but it's so rare. To your point, none of my customers have $3,500 that they're trying to bring.
Customer probably.
But anyway, in this case, this lady is so rare.
Yes.
It's just so
rare.
Depending
on the situation.
Just depending on the situation. And so anyway, to your point about, hey, my clients, they don't have a lot of money. These guys are, and if they do, like I said, they're trying to hold on to it.
And we want them to hold on to it, mainly because of the fact that way they don't go into debt when they're trying to buy some new furniture for that new house. Because
That's right.
nobody's taking everything that they had from and taking it to. It's not a bad idea. I'm not saying that you can't. We're just saying. We've got Chloe on the line. Hi, Chloe. I love the way you spell your name.
Yes.
It's actually Lori.
Okay, Lori. Okay.
Lori.
Yeah, you know how it is when you're either on with the headphone or what have you. Sorry about that. We like Lori
that's okay.
too.
Can you hear me better now?
Yes, we can.
I have a question about buy here, pay here. And as I've lived in a house, I've been there, it will be 3 years coming up in November. And a lot of transition is going to take place once this new lease takes about. I was just wondering, since I've been there, I've seen a lot of things that was not taking place as far as when they remodeled the house and the conditioning of the whole house as far as leakage and a lot of rooting from the trees that are in the back that messes with your plumbing. And so it's a lot of inconsistencies that's not thoroughly in that house done. And so I was just wondering if I was to go outside that house, can I get anything back from that, or would I have lost everything inside this house?
Well, I don't. You mean inside?
She's talking about she's under,
you're
she's
under
invested.
Contract.
She's
right,
invested.
You're invested.
Paid money, monthly payments, whatever.
We probably would have to really look at your contract to see exactly what it says. Because again, like you said, rent here, buy here. We just ask, for those who might be in that situation or need to do something a little different, trying to buy a house, to use a professional. Did you have a professional when you made this contract?
No.
Okay. And it's all good. Just give us a call. Just give us a call. My number is 317-590-7348. And we've got so much to talk about in those kind of situations, but I'm glad that you're talking about it now instead of November. So, again, 317-590-7348. Give me a call. I'm Janis, Lori, okay?
All right.
Hope to hear
so
from you soon. Thank you. And we've got Kim on the line. Hi, Kim.
Hey, I wanted to say that you guys do an awesome job. I enjoy listening to you. So informative. And I'm actually interested. Can you hear me?
Yes, we can.
Okay. I am looking to purchase. I have spent practically a year getting my credit together. I still have a few hiccups plus student loans that I'm working on. And I guess my question is, being a first-time home buyer, I wanted to know what kind of perks were out there for me. And also, I'm looking at a monthly payment in between $1,200 and $1,300. So how much house would that be?
Let me just figure that part up for you real quickly.
And two, definitely you're going to want to give Diana a call, and mainly because of the fact when our listening audience are sharing with us that they're trying to work on their credit themselves. So many times there might be something that you didn't have to do, or you're doing that might show something else that you don't want it to show. So give Diana a call. She's working on some figures, but again, she's going to help you with that.
$190 for the purchase price for that $1,200 payment. You're looking around $190 for purchase price, okay?
Okay.
Yeah, and potential for first-time home buyers, you're looking at down payment assistance maybe as a benefit. Also, the mortgage credit certificate, which is a rebate. I call it a rebate of your mortgage interest, 20% typically for the life of the loan. Okay. It's a lot of money, money. So it's probably one of the most misunderstood first-time homebuyer benefits, and probably most underutilized first-time homebuyer benefits also.
Yeah, as I was looking online, I was trying to find information for first-time homebuyers, just in the state of Indiana, and I came across a few things that I had wrote down, and it was kind of just hard to understand. I'm like, okay, so
it is.
As far as income guidelines and things like that, and so it was just a little confusing.
Hey, to say the least. Well, listen, that's why we're here, and definitely I'd love to talk to you more. Normally, also, what I try to do is if I don't have what it takes or what you're looking for, Janis and I belong to a wonderful group called the Central Indiana Realtist Association, and a lot of my colleagues, lender colleagues, also belong. So between us all, we get you taken care of.
Okay, that
Right.
sounds good. What was the number again?
My number is 317-402-5555.
Okay, great. Yeah, thank you. Because like I said, I'm looking to do this, and I've been working on my credit for the past year. I've done a lot of reading and research. And my aunt's in real estate. She's kind of coached me a little bit, but she's so busy.
Yeah. Yeah, and I tell you what, on the credit part and on the rules, I'm telling you, they change on a very regular basis. So, like Janis said, I would recommend, doesn't cost you anything, I would recommend going to my website, www.loanswithdiana. I'll give this to you too when you call, and applying, and let's take a look at your credit, because you may or may not need to do anything additional, or you just may need to do one or two things, and I would like to be able to tell you what that is,
tweak it for
so
you.
you can focus on those things.
Okay.
All right?
Okay. Great. Thank you so much.
You're welcome.
We appreciate
Have a
your phone
blessed day.
call. Well, it looks like we have to wrap up. This has been a great day, and I love it when I haven't even gotten through all of the information that I had to share with you. That means I have more to share next week. So, again, if you are interested in buying, selling, whether it's a for sale by owner or new construction, for any of your real estate needs, please call me, Janis Bradley, JB Real Estate Consultants, 317-590-7348, 317-590-7348.
And if you need to be pre-approved or pre-qualified, or you're looking for a lender, or you'd like to know where you stand, you can call me. My name's Diana, 317-402-5555. You can go to my website, www.loanswithdiana.com.
See you next week.
You've been listening to Home and Finance with your hosts, Diana Rice-Wilkerson and Janis Bradley. For more straight talk about financing a home and insider information about buying a home, listen next Saturday at 1 p.m. or call 402-5555. That's 402-5555.
The proceeding was a paid program.